Hey man, say man, how's your day, man? It's your favorite trader GDO coming back with another video, man. We about to go ahead and get into these charts. I ain't about to waste y'all time because I don't want you wasting mine. Y'all want to know how to trade? I'm about to teach y'all how to get paid. Oh, you feel me? Yes, sir. Y'all know my baby sleep, man. Y'all know my baby sleep. Let's go ahead and get off into the today, man. Today is December the 8th, 2025. 2026 coming up to a wrap. And everybody, everywhere you go, all they're talking about is chop, 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 chop city, chop, chop city. You feel me? That's all they're talking about. I'm gonna teach you what they don't want you to know, man. And it's very easy, bro. Boxes and lines, internals and externals. This is how you know if somebody is the real deal when it comes to trading. Again, I've been trading since 2018, so I've been reading charts since 2018, so I can speak on this. When their content is the same, not as a whole, but the gist, like what they're actually teaching, is the same. They're not leading you on, they're not trying to drag you to upsell you. It's the same thing every day. And what are we gonna talk about that we talk about every single day I come on here? Internal draws of liquidities, okay? So coming into the market, man, you start off by doing what? Go to your highest time frame, look for those internal draws of liquidity. What are internals? Internals are fair value gap, inverted fair value gaps, and gaps. I mainly focus on inverted fair value gaps and fair value gaps. What are these fair value gaps that you speak of, whether that's the inverted or just fair value gap? 3 candle patterns. 1, 2, 3. Opening between the first and the third. Boom. Okay. Go down to the daily. What do we have here? 1, 2, 3. Opening between the first and the third. All right. Now, remember, when doing this, we're speaking on a sense of relevancy. What is relevant to the current price action at that New York opening? Where is price most likely to come in contact with? Well, here we go. Daily time frame, we have an inversion. What does that fall up under? Internals, okay? 1, 2, 3. Opening between the first and the third. Opening between the first and the third. Boom, okay? 1, 2, 3. Opening between the first and the third. Opening between the first and the third. Boom, all right? Then guess what? We go to the next time frame. All right. Now, again, we're speaking on relevancy. All right. So when you're looking for these, man, you got to go to the left because that is your history. We have this 4-hour right here, but because it's in the daily, I didn't mark it because, of course, price is most likely going to continue until it reaches that daily liquidity. If that daily internal liquidity is close, most likely price is going to touch it. Why wouldn't it? Or attempt to. You know what I'm saying? If there's a mixture, like right now you have a 4-hour with a daily right here, but I didn't mark the 4-hour because this daily is here and it's going to get tapped. Now, when you're looking at this daily gap, you're like, okay, that's a big gap. How can I tell where price is going to flip? Well, before I used to do it like this, but even that caused probably like the 50% of the fair value gap. But then what I started realizing is you can go to lower time frame internals and kind of narrow where price is most likely to flip. So coming into the morning, you see that we have this 4-hour internal way over here. It's a fair value gap. It's no longer valid, but at the time it was valid, okay? Then you have this guy, then you have this guy, and then down here you have this guy. I didn't mark that, I only marked this, and I went about my business, okay? Now when we go to the 2-hour time frame, man, remember, this is where my external high, my external low was. So we were in a 2-hour right here, nothing right here, nothing over here. You have this guy, but really, of course, it's going to go to this daily. But look what we have. We have a 2-hour internal right here, and we have a 2-hour internal right here. All right, so I didn't mark that up for the trading day, but I'm gonna mark it up for this video to show you guys. We have a 2-hour internal right here, and again, what is the internal? 1 candle, 2 candle, 3 candle, 1 candle, 2 candle, 3 candle, opening between the first and the third, opening between the first and the third. All right. Now, let's get into the 5-minute time frame where we mark our highs and we mark our lows. Okay. Coming up, where I have my 2-minute external high and my 2-minute external low is. Obviously, when I come to mark my highs, it's gonna look something like this. Gonna be one high, which we're gonna make it the 5-minute, because that's what it is. 2, 3, 4, right? These are all highs, external draws, liquidity that I can target. And then of course, when we come over here to the left, and I could have really just gone to the 15-minute. When we come over here to the left, you see how these guys are stacking up each other, right? Because think about it, when you mark out these externals, right? What is this called? A ray? Or man, I've been trading. I don't know what this is called no more. But you see, it marks out the blue for us. So with my 2-minute external high and my 2-minute external low, what I marked, because it really didn't give us nothing clean, we have this high, that high, that high. We have all these external draws, liquidity that we can go for if price tells us we're going to the upside, right? So that's what that looks like. And then the lows look like this. That may be no, that's okay, that's not yet, because I guess I hit delete and it took all that away. That's a low, that's a low, that's a low, that's an external low interest. We'll keep that the same. And then these guys, all right. So coming into my time frame where I enter in, this is how I went today. This is how I went. And we're gonna actually delete these now, because when it gets too much, I don't like having all that stuff on my screen. Let's see. Boom. Boom. Actually, I'm doing it the slow way. Boom. Boom. All right. So, coming into the market, man, sometimes everything is going to be pretty. Sometimes it's just ugly. You feel me? So, when we're looking at this, we know that when we come down here, and then, I mean, I don't have to really explain it, bro. It's self-explanatory. Like, the proof is so much proof in the pudding, boy. Golly, it's crazy. But you see what happened when we came in contact with this weekly again. We bounced up. This was a 2-minute high. This was a 2-minute external low. All right. We broke structure to the upside. What does that mean? We broke one of these externals, because every time frame has these external levels, high and a low, and they also have internals, which are the fair value gaps or inverted fair value gaps. Break of structure is when one of them is broken in the opposite direction of the current trend. All right. So we were going down. We had a sell leg. That was the lower low. There was the lower high. This was the lower low. Then we broke structure to the upside. All right. Then we continued, got solidified. That was the external high. This was the external low. Then we broke that high right here at 924. Well, being that we broke that high at 924 and haven't had a solidifier yet, which is just the opposite candle to mark, that will allow us to mark that new high as the new high or higher high. This guy is the external low, and we're just waiting for that solidifier. Well, at 924, 926, 928, 930, we don't get that. We don't get that until what? Like we don't get that until 934. So what it looks like now is this. All right. That's the first time that it's actually giving us a real external high and an external low, a higher high and a lower high. All right. So what is the exceeded edge model rule? What is the exceeded edge model, right? Well, the exceeded edge model states that break after 930. After that break, ask yourself, where's the nearest high time frame internal? High time frame internals being from 1 hour to whatever your highest is, right? If it's far, you catch price 2. If it's close, you allow price to come in contact, then react. What is that reaction, you must say? It is a break of structure, and I'm going to show you. Once that break of structure occurs, then you what? You execute. What is your execution? Actually getting in the trade. All right, so we didn't really have a break because the break of structure, or not a break of structure because it's already continuing in that direction, but the break or the new higher high hasn't been put in yet because we didn't get our solidifier to 934. So technically the first break after 930 was 952. All right, but what's right here? It's a daily internal. So obviously we're not gonna get in the buy to catch price right there, because we know when price come in contact with the internal, it's either gonna double break to go through it or it's gonna be sent away from it. Higher time frame internals either allow price to come through or it sends them away. And in this case, it allowed us entry, but it sent us away. All right. So again, this white box that you're seeing is a daily internal. How did I find that daily internal? All right. went to the daily time frame. Remember, this is where we started. So I'm asking myself, where is price most likely to come in contact with? Well, probably this guy or this guy in daily time frames, right? So 1, 2, 3, 1, 2, 3, opening between the first and the third candle, boom, internal. So how do I know where price is most likely going to flip inside this big box? Well, like I said before, I used to do the 50% rule, but then I stopped once I realized that all you have to do is go to a lower time frame, as you just seen me do. This is a daily internal, but I went to the 2 hour to see where, if there's any internals on that time frame that can probably help slow down that price and get a reaction out of it, right? If you want to look at it that way, which is a good way to look at it, right? So based off what I just said, when price moved, did that push after 9:30 and retraced, and then actually gave us our first break after the New York session opening, we came in contact with the daily, and what did we do? Okay, because at this point, this is the higher high, this is the higher low, this is the higher high, this is the higher low, okay? Then so on and so forth, and then boom, you get to a point where this is the higher low, this is the higher high, okay? Now, this high gets broken at 10:16, which then creates this guy as the higher low, and this is the new higher high. All right, but what is actually going on? There's a daily internal, and then there's a 2 hour internal. It may be hard for some, especially beginners, to try to figure out where price is going to flip in such big boxes. But look, there's more boxes. And where did price actually flip? Inside the daily, but also inside the 2 hour that's inside the daily. So it's not really rocket science. It's not that hard. But coming in, having so many different people pull you in all these different directions, leading you on, man, it could become kind of redundant. You know what I'm saying? So see, this is the hardest part about teaching, because in my eyes, being that I've been teaching for so long, and I literally taught myself in a sense before I went to YouTube, bro, this is there's no more proof you need, bro. Look where price is reacting to. People say there's no algorithm to the charts, but clearly there is, man. You know what I'm saying? So once we came in contact with this daily internal, and then came in contact with another time frame internal, right? We made a higher high, a lower high, then we broke structure to the downside, enter the trade. And what am I actually targeting? I'm targeting these lows. Boom, 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 boom. Those are the lows I'm targeting. So as you can see, I had my take profit at 251 points, right? I had my stop loss at 40 points, right? And I was targeting these lows, okay? Well, it only gave me about 188 points before it actually turned around. And I can't be any more happy with that. What else do you want from a trading day? You get what I'm saying? There's nothing else you should want from a trading day, because 188 points is a lot of money, regardless of what. If you're trading from $1 a point on up, 188 points is good money, because $188 is more than what you would make 8 hours making $20 an hour. Okay, so it's there for you guys, but the thing is, you have to go through the motions. You have to go through it. Everybody goes through everything that you're experiencing in this trading journey. Everybody's going to experience the same thing, just in different variations. Okay, so you have to go through the motions. Okay, blood, sweat, tears, the time, the boredom. It can get boring, even with the thought of making a lot of money. Statistically speaking, a lot of people will never touch money, okay? But if you don't focus on that, and you just focus on putting in the work, you will get there. Take it from me. I've done it. I've made so much money. I've lost money. I've made money. I've lost it. I've been even after making money. I've got back to making money. I've gone on losing streaks. I've been doing this for going on 8 years, guys. So trust me when I say, if you want it, you can do it, okay? It's just that simple. It takes time in the game. It's like being in school. Once you get to the 11th grade, 12th grade, you start knowing how to move around the school, you feel me? Once you get in college, once you get out that little freshman, then you start learning how to move around the campus. You start learning how to sweet talk the professors to let you extend. Send them a little email. You know what I'm saying? You get what I'm saying? Same thing with trading. You have to put the time in. You have to put the work in. And you have to be persistent. You have to believe in yourself, because nobody's going to believe in you if you don't believe in yourself, guys. 188 points for the day. Can't be any more happy than that. I don't know what else you guys want. You get what I'm saying? There's nothing else. It's that easy. It's that easy. And it's that easy, guys. If you want to learn how to trade like this, man, visit neverquitexceed.com. Become a profit titan. Join the Discord, man. Be around like-minded people, bro. We're working every day. Of course, life hits people. Conversations slow down. But know one thing for sure. GDO is always putting in that work. Behind closed doors, in front of open doors, or upside down, I'm putting in that work. So, amen, say man. I know you're having a great day, man. It's favorite trader GDO coming out with another video, man. Yes, sir.